Welcome to Let's Talk. This is a new episode with my co-host Demetris. My name is Akim. We're both popular investors on eToro, and today we're going to discuss Demetris' strategy, Demetris' favorite assets, and how he manages to outperform the stock market in the last 5-year period. So, Demetris, if you had to sum up your strategy in 3 words, I know I didn't send you that question beforehand, but if you had 3 words to define it, what would they be?
Only in US.
Only in US.
Only in US.
Why the US of A
So
exclusively?
exclusively, even though I have one position in LVMH, but as you said, it's global and it has a US listing. So we're getting a pass on that. But I prefer to stay.
But you also have two cryptos, right? Two cryptos. But
They're also US centric. So
yeah.
the cryptocurrency markets are also US centric. So, but as far as stocks, all of them except one is in the US, and um, its familiarity most of all. I'm familiar with the way things are happening in the US, how people thinking about their finances, and how the economy is set up to for the stock market to do well, and how the government not guaranteeing a pension to the citizens, forcing them to take matters in their own hands and invest for their own future in the stock market. All these are reasons that I prefer to be invested only in the US. Another reason is because 60% of the world's market cap is in the US. They are very well covered and observed. So if you invested in Microsoft and Google and Amazon and all that, you just Google the name of the company and you get all the news that you need to know in order to make a decision. That comes with the disadvantage that all the analysts and fund managers are also covering those markets. So it's a more big competition, but I mean, you have to get the price with the count, right? So
But are these companies really US companies, actually? I'm saying that aren't they just don't they just happen to be incorporated in the US?
yes.
Because their revenues are global, right? And
Mhm.
they are highly dependent. If I think of Apple, for example, they are highly dependent on China
Mhm.
and on other economies, on Europe, etc. So are those really you? I mean, are you not lying to yourself? I'm asking in a provocative manner. Are those really US companies? They just happen to be incorporated in the US. Their revenues are not in the US. They don't depend on US politics, on US consumer, on US anything.
Yes. No, they are depending on the US because if you are a ship carrying Apple phones in the Indian Ocean and some pirate tried to steal them, the US Navy is going to show up in no time and escort you to your land to sell those iPhones. So being a US company, you are protected within the US, but you're also protected within the globe, and the US dollar and the US Navy, or the military industrial complex, that $1 trillion every year paying on the military, it comes handy when you are a multinational trying to do business abroad. Also, the US way, so the US is so business centric, they have their own way of doing things. We were having a podcast last week discussing with Rafa and George about the companies in South America, and some of the risk is like, you know, the government getting too involved with some of the companies. You don't get that you don't get that in America. Companies are left alone to do as they want, and if they get in trouble, maybe they get a bailout. But in most times, they are left alone to do business as they see fit. So you choosing the manager or the CEO of the company, you know he's running the show and not some guy in the back doing favors for others. I'm talking about the big companies, the technology companies that sell products to consumers. The military industrial complex companies, that's a different category. And it's one of the reasons that I'm not investing in them, is because there are some conflicts at times. So to answer your question, if they're American companies, they are in the good parts, but they are also, they're getting most of their revenue from abroad because American companies know how to market their products well and go global much more easily than Europe can do that as well. But other than Europe and the United States, not other countries can create a company, make it a winner, a global winner, and then push it across the globe.
So you're US centric. Am I wrong to say you also prefer mega cap or big cap? And am I also wrong to say that you're fairly agnostic to sectors?
So some sectors I like and some sectors I don't like. Some I understand more.
In general, or at this particular moment, given this year US election and the rate cuts coming, or in general, are there sectors you like more, you feel more comfortable with? And do you like bigger companies over smaller companies, right? I mean, when we see your portfolio, this is the feeling we get.
I do like bigger companies rather than smaller, even though I have a couple of small cap. I believe BJ's wholesale is like 10 billion, which is not small. It's actually big, but compared to 3 trillion of Nvidia, it's quite small. Have some private equity is in the 10, 20 billion. So, but the majority, you're correct, the majority is large cap, mega cap technology.
Hundreds of billions and trillions.
And trillions, yeah, because those, they are well covered. You're not gonna get, so the chances of you buying Microsoft and then a scandal that they're just cooking the books is not going to happen because there are so many people looking so deeply into them, looking for a mistake. So the mistakes usually are not there. So you just taking some of your risk away of the unknown. The market risk remains like in every position you are in the stock market, but the large companies I found are the safest in terms of fraud, and they are the first ones to come back after a crisis. So if you buy them right, you're gonna recover.
Absolutely. And in terms of sectors, tech?
Tech, of course. I mean, we were just talking about this before the episode started.
Which sector could you not live without? Tech, right? That's the only sector that you could not exclude.
Tech is number one, banks is number two, retail is number three, healthcare is number four.
So tech, bank, and consumer, essentially.
Consumer, yes. It's a consumer economy. And if you see tech, it's basically consumer because the products and services they're making, they're selling them to the consumer. So
interesting. So it's consumer and banks. Banks are where consumer leave their money, actually. So in the end, it all breaks down to consumer, if I don't oversimplify. For you, your portfolio is centered on the US consumer.
The US economy is 70% consumer economy, so it should be around the consumer.
Around the US consumer.
The US consumer.
Let's do a little marathon, if you agree. We will go through your portfolio, and we will speak very quickly about every asset that's in your portfolio, very quickly. A couple sentences, why that asset is there, and where you plan to exit.
All right. So
let's go into your page. Okay, overview. Let's get an overview.
So
before we start with the portfolio, you can see performance is pretty good. Maybe if you can show, if you can put the cursor, 19% first year, 43% second year, up, and then down 23%.
That's a
The
bear
stock
market.
market was the stock market was down as well, somewhere around 25%, I think, maybe even more.
No, it was
40%.
the S&P was down 18% and I was down 23. So I underperformed by 5%, but I make it up the next year.
40% up in
Yeah,
2023, and then year to date you're completely exploding everything, 21%, and it's
21%,
only we're only half year through.
halfway through the year.
So this is
Yes,
quite an
the
outstanding
2 year,
performance,
the 2 years affected
including the
by
bear
this.
market.
It's affected by this. So once the 2024 is done, then this thing is going to explode with the next two. And then if you look closely to the
It's
stuff,
impressive. Look at this, 7% just this year, 7% in February, 7% in March, 7% in May. I mean, this kind of performances people usually achieve in 1 year of
yeah.
trading, and you do them in 1 month, and you make it look quite easy.
I mean, yeah, I mean, and if you look at my portfolio, I mean, before even looking the portfolio, because most people now they're thinking that I'm 50% crypto, okay, which is not the case. I mean, when we go to a portfolio, you're gonna see that there are a lot of safe bets in the portfolio, a lot of boring companies that they don't move that much. So we got some of the performance from Nvidia, of course. I was into Nvidia at the right time in history, and we got some of the performance, but still you have to buy the stock at the time, and then you have to be able to have the guts to hold it. Why it goes up
Mhm.
and down with all the volatility and all the narrative in the media goes crazy that it's going back to zero. So there is some skill into holding. So let me scroll down for okay, this is the amount of copiers. And I mean, if you see
The average risk
if you see the
is
risk
very
score,
stable,
it's
very
stable, right?
stable.
It doesn't look like I mean, you
You
can tell
don't
that I'm not using
you don't
leverage from the risk
yeah.
score.
No leverage, and you don't take more risks or less risks.
More
You're very
risk than you
stable.
should. And the daily
Mhm.
max drawdown 2.46% is not tragic. Some people prefer to be in 1.5. But if you want to get some performance out of your portfolio, you have to be able to accept at least some daily volatility. The weekly and the yearly, those pullbacks and and corrections are causing that. So I don't think you can avoid completely the weekly and the yearly. We get bad news.
Mhm.
We get the Fed being hawkish on TV, and so that's how you got it. The trading.
Mhm.
So this is the trading. So 14.8% is the trading I do on crypto. It's not how much crypto I'm holding. I'm only holding less than 9% of crypto, but the trading in percentages is 14%, 3% ETFs, which I don't think it's accurate because I haven't bought any ETFs for years now. I only bought them a couple of times and they're just sitting there. And then you go to the frequently traded. I know you hate this one, Rivian. You're allergic to this
We'll
one.
go. We'll go. We will go into it. Let's start the marathon.
Okay.
Let's go
Let
into
me
your portfolio.
let me
Yes,
let me show this down. So it's 23
yes.
months
This one
average
is quite
holding period.
controversial. It's quite controversial. The truth is you don't do 3.5 trades per week. It's just when you rebalance your portfolio once a year, for example,
Yes,
there's a lot of positions that are traded at
yes.
once. Even if you, for example, you will show I mean, for example, your NVIDIA position is made of 10 or 15 or 20 positions that you buy over time. So
Mhm.
if you were to rebalance it, it would look like you do really a lot of trades while you just rebalanced once in a year NVIDIA, for example. right?
Yes.
So this is a bit misleading. You're not a day trader. It looks like you're a day trader. It looks like you trade every 2 days,
Yeah,
but it's
it's
not.
not the case. It's not the case. I rarely trade actually. I can go weeks and weeks without trade at all. And then some days you have to rebalance, you have to buy something, you have to sell something on the same day. It just keeps the averages. So sometimes it could be misleading.
Yes. Let's do that little marathon then. This is your portfolio, so let's rank it by value, portfolio value. I think this is what's more representative.
Mhm.
Your biggest weight in the portfolio, maybe you can rank it by value. It's ranked by invested at the moment. Instead of ranking it by cost, if you can rank it by value, portfolio values. You know what I'm saying? Yes. Okay. So number one,
Yes.
Nvidia.
NVIDIA.
Why is it your biggest position and when are you exiting it?
So it's my biggest position because I bought it in 2022 for $150 a share before the split.
Pre-split
And
basis.
yes, and if you hold them long enough, that's what you get. You get 437%. And I also exited. I trim my position by 15% after it passed Apple. After it passed Apple by market cap, I was like, okay, let me take some off the table, and I'm I'm further gonna trim it because I don't want it to go more than 10%. Now it's at 8.6%. When it gets to an all-time high of $140 per share, now it's at 128. When it gets to 140, 145, I
You
might
might
trim,
trim it again.
I'm gonna trim it again. Yes.
But you will never completely exit, just
No,
you
no.
continue trimming.
I'm just gonna continue to it.
All
In
right.
some point, it's gonna have a bad month or two. I'm expecting that. And if it's attractive, I might buy it. But because the long-term case for Nvidia is there, the semiconductor, the AI, it's not it's not seasonal. It's not um, doing better in some part of the business cycle and some part not. So it's
It
a
performed absolutely. I mean, it was impressive while the rates were going up and while the
yeah,
rates were up. And so there's really no adverse impact here on that, right?
yeah,
So the next position, UNH, you made it also one of your very biggest position. This I knew you massively invested in UNH recently
yes.
after it crashed because of headwinds in the healthcare sector. So why do you believe
So
in UNH?
UNH, so UNH is the biggest component of the Dow. So the Dow Jones is the blue chips of blue chips. In order to make the cut to make the Dow, it's like making the Hall of Fame in golf. Okay, names are gonna be passed like they're amateurs. So the Dow is the club you want to belong to if you want to be a really good company. And UNH is the biggest component of the Dow because it has been characterized in the past as a traditional compounder. It has a history of 30% returns for the 20-year period. It stopped doing that when I invested in it. Soon as I took a stake in it, then it stopped compounding, but that's just the part of the cycle we are. So that's why you see a huge allocation in it. It's also a safe bet going into rate cuts and into the election because healthcare is going to come up in the debates in the next couple of months, and it's one of the major concerns Americans have, along with energy and the military spending. It's healthcare. And since the government is not providing the healthcare for people, you have to provide your own. If you want a
Absolutely.
company
Yep.
to buy and hold,
That justifies the bet.
yes,
Amazon. I know it's one of your darlings, one of your babies.
yes. So I have I have a personal relationship with Amazon. It was the first company that made me think like an investor instead of a consumer when I was working in the e-commerce sector. And I realized Amazon, they're just beating everyone with their efficiency and their speed. And I was reading a stat the other day that by the year 2030, Walmart and Amazon are going to be 40 or 45% of all commerce in the United States. So,
Insane.
and by the way, I have Walmart as well.
We'll come to it.
So it's a well positioned. I was reading today about Amazon that it just signed a contract with the Australian government for 1.3 billion to build a secure cloud so they can share intelligence with their allies. So Amazon now is entering the military industrial complex sector.
Unbelievable. And can you also imagine one day perhaps that Amazon will have stores like Walmart, Target? Is that something you can imagine?
They tried the stores. They tried a couple of stores that you were walking in without money, and they were just scanning you and getting everything you
Yeah, there
want
is in
out.
London as well. Yeah.
Yeah, but it didn't work. They closed that one in Seattle, but that was just the first try. But yeah, I believe they're gonna have some stores in
They
some.
might continue trying, right? They
No,
will
they're
they
gonna
will they will
continue
improve
trying.
the
They're gonna
Mhm.
continue trying because they bought Whole Foods, the supermarket chain in the United States. I think they bought it like 6 or 7 years ago. So it's not going to be their last acquisition. I believe next time they're gonna see a major chain in trouble, they're just gonna buy them. They have more money to spend than God. So eventually they're gonna enter into the store business as well. As at the same time, Walmart is gonna expand its e-commerce. So the way I see it in the next 10, 15 years, it's just gonna be between in the US, it's going to be Amazon and Walmart. And then for wholesale, you're gonna have Costco, which is a different category. It's not exactly supermarkets. It's a wholesale, which is a different kind of crowd of so yeah.
Mhm.
That's Amazon.
The last stock, I don't even want to talk about it. I
It's gonna be brief.
it's Rivian.
Yes.
Rivian Automotive. I don't even want to talk about it. It's such a terrible company.
No, it's not a
They're
terrible
losing
company.
money on every car they produce. The financials keep going down. The investors keep injecting money, keep injecting cash, keep throwing money at Rivian. You had Volkswagen recently put $5 billion into Rivian to try to save it. It's like a company that just has to die, and
Yeah.
investors and the markets, they keep trying to save, saying it's gonna be the next Tesla, it's gonna be the next Tesla, it's gonna be the next Tesla. But you have so many EV companies,
Yes.
Chinese ones and non-Chinese, right? Chinese, US, European, that are new, that are young, that are small, and that are growing, and that don't have the struggles that Rivian has. Rivian is trying, and I understand the business model. Rivian is trying to make cars made in USA.
Yes.
Tesla cars heavily depend on China, right? And if there's a war one day between US and China, Tesla, it's over.
Yeah.
But Rivian, it would not be over for Rivian. So Rivian maybe as a hedge play, potential hedge play, but honestly, if there's a war between US and China, the whole world, it's over, right? So Rivian, the only argument in favor of investing in Rivian is that they produce cars in USA. But perhaps you're not supposed to produce cars in the USA because they're not managing to make a single penny on the cars they produce. They just keep burning the cash of everyone, of everyone that gives them cash. So
Let me make my case.
why did you give them cash? Why did you give them 4% of your portfolio?
Let me make my case. So
By the
it's
way, I'm provocative on purpose.
yeah, I know. I
If
know.
people want to buy Rivian, if people want to buy Rivian,
You wrote
please,
you wrote
Dimitri,
about it. You wrote about it on Seeking Alpha and other publications,
I
multiple.
wrote about it. I said it's a
Yeah.
terrible company, and I'm saying
So,
the same online. I might change my mind one day if I
and
see
that's
that there is some proper progress. Now Volkswagen coming in, perhaps it's gonna change something. But I'll let you
and
I'll
that's
let you argue in favor of Rivian,
and
Dimitri.
that's why we have a healthy relationship, because we can disagree about something, but we can talk and laugh about it. We don't have to argue. So let me make my case for Rivian. Okay, so there is a stat that says that every car company that goes public, every car company, electric or otherwise, they don't make money for the first 7 years. That's a stat. That's the average. Doesn't matter if it's McLaren, doesn't matter, whatever the case may be. So once you know that, you understand that, and you don't have any illusions that a company as electric and a startup, that they're gonna make money early, and you're not fooled into that, because I wasn't. I was aware that they're not gonna make money for some point. Okay, I didn't expect the stock to get hit that much. Okay, I didn't expect that. I bought. Let me press on it so we can talk with.
The IPO was back in
2021,
2021, I believe.
in November, and I bought it in December. So
You started buying in December, yes.
yes, in December is right here, there. Yeah, in December of.
And Rivian was valued at a crazy valuation.
Some point it went 100, and in some point it went
66.5 billion. It went above $100 billion.
170 almost. 170.
170
It
billion
got really
dollars.
crazy. So let me make my case for Rivian, okay? So, just like banks, they're not all the same. So Tesla and Rivian, they might be in the EV sector, but they are different because they make a different kind of product. Rivian is make trucks and SUVs. Tesla doesn't make trucks; they make the Cybertruck, but it's not a traditional truck that the guy in Texas is going to drive to his yard. It's mostly for the West Coast and East Coast elites. Okay, so they have a different product, they have a different price point, they have different demographics. Okay, and they make a different product. They produce in the United States, in Illinois, in the Midwest. So, but that said,
They produce in the
they lose
Midwest at a
money.
time when all the companies go and produce in Mexico and in China.
Yes, yes,
Right.
because
So
they want to be made in the USA, and they went public in 2021, not knowing that the bear market will come in 2022, and that the Fed is gonna increase rates in the fastest rate in recent history. They didn't know that. If they knew that, they probably wouldn't go public. But if they weren't going public, probably wouldn't survive. So their choices weren't that many at the time.
yes.
I'm
But
just.
look, you mentioned that automobile companies burn investors' cash in the first 7 years after IPO,
Yes,
right? Essentially burn the cash the first 7 years. So
yes.
why for Rivian not wait a couple more years? Because now it's just the third year after IPO. I think it might be a good time perhaps to start buying at the end of the year when the rate cut's gonna start coming. And perhaps the company, to buy a small share, I don't say no, as a small portion of your portfolio. But why not waiting a little bit longer? Why did you start buying in December 2021 at this crazy
Are you
valuation?
asking me
I am asking you. You're the
why
one
I
who
bought
bought in
in
December
December?
2021, 1 month after the IPO.
Because
Why not wait 7 years?
so buying on the IPO is stupid, because it went up, it went public $90, and then within a couple of days or a week it went up to 150, 60, 70. Okay, so I didn't buy any of that. I was watching, and then it went down below the IPO price or something like that. And then I thought I was smart buying below the IPO price, not knowing that inflation will spike. And then the next month it was the Ukraine war and then the Fed. So it was like a perfect storm of all that. I'm not trying to making excuses. I try my best to get the best price I could at the time. It didn't work, obviously, but I believe now with the Volkswagen jumping in 5 billion, and I don't think Volkswagen wants to lose 5 billion out of their money just like that.
Out of compassion, yeah,
Out of
definitely
compassion,
not.
they saw something. They want a foothold into the EV,
US EV.
US. Yes, because throwing the Volkswagens and Mercedes and BMWs, even though BMW and Mercedes are now Volkswagen, but you know the other brands they have is not American, but Rivian is American through and through. So they want some part of that that doesn't have to do with geopolitics that Tesla has, that doesn't have a very wide CEO like Tesla has.
When you
So
think about it, it's a pretty good price that Volkswagen is paying for access
yes,
to the US market.
yes,
5 billion, and you have a good access to a lot of US
yes,
consumers.
yes.
But this doesn't make Rivian a good company.
No, it doesn't. But
It makes Rivian a bridge at best.
they said that they expect to be gross margin positive by Q4 of this year.
Gross margin. So the net
Gross
margin,
positive.
right? Do you know that meme about EBITDA and adjusted EBITDA, where
Yes,
one is a burger without anything
yes,
and the other?
yes. But in our world, we both know these things matter. The EBITDA, I find it ridiculous. You find it ridiculous, but some people get on TV and they say, "Oh my God, are you seeing those numbers on EBITDA?" And we are laughing, but some people take them really seriously. So if that happens, it could be a step in the right direction. And like I said, it's like the allocation is low. Even if it goes to zero, it doesn't hurt me. So that's the way I like to take risks. I truly believe the EV sector is going to be massive in the next 10 years. Now the question, who is going to survive of all the companies that went public and went under in the last 5 years? I believe Rivian will survive now with the Volkswagen stake. I also thought Tesla should have bought the stake, not Volkswagen.
Mhm.
Elon Musk
That would have made sense.
should have swallowed his pride, just get 5 billion, give it to Rivian, assist with everything they need, okay? And just do exactly what Microsoft did with Apple 20 years ago. If he did that,
That's pocket money, right, for Tesla?
that he probably waste more money on 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 his private ventures every year than that. So if you really wanted to corner the EV sector and make sure that the EV sector prospers in the United States, he should have given Rivian 5 billion, give them some assist them with economies of scale, and just own half of it. And if they do well, it's a plus. If they go under, okay, one competitor went under, so what? That was the move. But Volkswagen, and I said on LinkedIn that Volkswagen is better private equity company than a car company. They should be
That was controversial. That was very controversial, to
it
be
is
honest.
controversial, but
Controversial
it's
thing to
true.
say.
They managed to buy all those car companies in Europe, and they're stretching the US now. And apparently the worst company of them all is Volkswagen. Everything else they buy is good, except Volkswagen. So they just it's better becoming a private equity company than a car company.
All right. All right. Thank you, Dimitri. Was there anything else you wanted to bring the copier's attention to? I think we had a very long session.
Yeah.
We did a very nice marathon through your portfolio. Do you want to do a closing statement?
What I would say to my copiers is, or potential copiers, is that always be aware that we invest for the long term. If I don't see a company, if I don't see holding the company for at least a year or two, I'm not even going to engage in it. So I would appreciate if people stay at least a year or two so they can see the potential upside within the portfolio and the capital appreciation. And during the days of volatility, don't be surprised if you see me buying deep into the reds. That's my style. So on the days that people get scared and they sell, it's the days that I do my best buying. And I can find multiple examples within the portfolio. But other than that, it's just patience and consistency. And if you stick with me, you will make money. That's for sure.
Mhm. All right. Thanks a lot, Dimitri. I think it was really interesting to do this show, this episode together about your portfolio. If I could, I would copy you as well. So thanks, Dimitri, for the view. And guys, remember to follow Dimitri to copy his portfolio if you haven't. If you copied, just be patient. May you be in red or green. There's a lot more green ahead. Thanks, Dimitri, and speak soon.
Thank you, my friend. Thank you, guys. See you on the next one.
Mhm.